Hello, good afternoon. You're watching Market Fatafat on ET now. I'm Dhwani Motiwala and with me Shell D'Souza as well. Sharon, very good afternoon to you as well. Market's managing to hold on to the 22,550 levels and around that, but nothing exciting today.
Absolutely, nothing exciting at all in the markets today, no doubt. Now we are actually trying to gain some more ground and head towards the day's highest point when you talk about the Nifty knocking at that 22,600 mark, but it's been a very quiet day to put it so. After the initial dip, the markets rebounded and we've been seeing a range-bound trading session, and ditto coming in for Nifty. Bank is holding on to the loss of about 0.7%. The broader markets as well fell in tandem with the benchmark indices, but from there on they've also actually recovered from the day's lowest point. But yes, not that a great picture coming in for the markets, doing absolutely nothing. Rather, it's in a wait and watch mode. That's what it seems like, Vinny.
Absolutely, in a wait and watch mode is what we could call the markets so far. Broader markets a bit more subdued than the benchmark indices. Let's move on and get started with all the stocks that have been buzzing in trade on the back of news flows and on the technicals. On the technicals, we're joined by Dhwani Patel today, while from the research team we have Ankita as well as Ashesha joining in with us. A very good afternoon to all three of you all as well, and good afternoon to you as well, Cheryl. But let me start with the first stock that we should keep an eye out on today. That's Metropolis Healthcare, buzzing away in trade today. We're seeing that a good revenue growth is what the company managed to report, around a 17% growth in terms of revenues. The EBITDA performance was up. Overall, we saw an increase of 14% in terms of the EBITDA, while the profits of the company also managed to see a decent growth. Margins came in at 24.1%, slight bit of a contraction there. But the core business and revenue growth of the company, that was up by 15%. We also did manage to speak to the management, and they did give in some highlights for the outlook going forward as well. Let's go across and actually just listen into what they had to say as well. Okay, maybe we'll connect that later, but yes, they had given very positive commentary, and that's what we'll be keeping an eye out on. The outlook for FY25, core businesses, the premium wellness business, what they highlighted was doing quite well.
Alright, so that is about Metropolis, but let's talk about Grasim and why is this one in focus, because it's all set to report its numbers today. And if you look at the analysts, on an average they're expecting the company to report about a 48% rise in their profits. If you look at also what else the analysts are believing, that they are expected to report a smaller than expected 8% fall in Q3, that was in Q3 profit. If you compare that, they're expecting a good rise coming in for their profit in the current quarter. What analysts are expecting that the Birla Opus Paints business will drive the top line growth for the company. Remember, the company had launched the business in Jan to March quarter, that's in the Q4 of FY24. And if you look at the other companies, like you had the Asian Paints as well as you had Kansai Nerolac, they do not report that great an enthusing number coming in for the quarter gone by. So what the analysts are expecting, the Grasim will post a better than expected, at least a good healthy profit number, and the number should be out anytime now.
Absolutely, surely keeping an eye on that one. But let's move on and talk about Finolex Cables, Dhwani, on the charts and technicals. What's the word for Finolex Cable now, and what is the target price that one should keep an eye out on here?
Absolutely. It's a very noteworthy chart for today's move that we are watching on Fin Cables over here. We are also seeing volumes being giving an increment over here. Apart from that, the RSI is giving a positive crossover. It's a strong buy recommendation actually coming in from current levels. One can go long into it. Any dips that you're getting in this particular counter around 1080 levels also is a good point of entry in this one. The momentum must continue on the higher side, and the next targets that I'm watching out for this particular counter over here is 1250. Given 1250 is taken out, we'll also see further highs of 1300 coming in. Stop loss on the lower side that has to be maintained is of 1040.
Alright, so that is the take coming in on Finolex Cables. But Ashesha, over to you. HG Infra as well as PNC Infra, why both of these counters are in focus today?
Well, both these infra stocks in focus today on the back of order wins. We had railway stocks in focus yesterday, but we have infra stocks in focus today on the back of order wins. First up, let's talk about HG Infra. The stock is up 9.5% today after it was declared L1 bidder by Maharashtra State Road Development Corporation for 2 projects with a total worth of about 3,200 crores. PNC Infra on the same peg is up nearly 16%. They won orders from Maharashtra State Road Development Corporation worth about 5,000 crores. So on the back of order wins, we have that huge surge coming on both these infra counters in trade today.
Let's move on to the next one, and that is BHEL. Ankita, this one is an earnings candidate. We're seeing some bit of a pressure coming in on BHEL today.
Well, that's correct, Vinny. In fact, BHEL tumbled over 7% in the morning straight after Q4 results, missed the street estimates, and brokerages also gave a sell rating. But we'll look into that. CLSA shared a sell rating on BHEL with a target price of 189 rupees per share, implying a downside of 36% from the current levels. Morgan Stanley also, shared a target below the current market price, setting it at 220 rupees per share, which indicates a downside of 34% as Q4 earnings missed the street estimates. However, they are maintaining an equal weight on BHEL, seeing improving earnings visibility with strong orders and healthy project pipelines. Nuvama and Antique, on the other hand, maintained a buy on the counter. They've hiked the target price to 400 and 360 rupees respectively. But let's look at the results also that missed the street estimates. BHEL's net profit fell 26% on a year-on-year basis, and even the margin and the profits saw a downtick. And because of that, we did see the street giving it a thumbs down, and we did see the stock tumble down 7% in trade. Currently, it has eased off those, come up from those levels, and it is now trading with cuts of almost 5%.
Okay. Keeping an eye out on BHEL today, a lot of brokerage notes that have come in. Some have given the hike the target price, while some have actually maintained their rating. But a bit of a subduedness is what they're expecting there. But let's move on to the next one, and Tech Mahindra. Dhwani, from the IT pack, what is in terms of the targets that you're keeping out for this one? Last 6 months, you've seen a 10 to 11% return for this. What is the outlook now?
Absolutely. When we're talking about the tech counters, there are a couple of names that are there. Infosys is doing well, HCL Tech is doing well, but Tech Mahindra specifically, chartically, is coming on the radar over here, for the reason being that the stock has made its bottom on the lower side, and then we have also got a confirmation of its higher high formation over here, and it's continuing further from the current levels. Derivative data is also suggesting long build-ups over here in this counter. So from current levels, Tech Mahindra becomes a short-term trade over here, giving a stop loss over here on the lower side at 1300 for a target on the higher side of 1400.
Alright, so that's the take coming in on Tech Mahindra. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, a lot of stocks to discuss. Don't go anywhere. Welcome back. You're watching Market Fatafat on ET Now, a show where we get you stocks that are buzzing on news flow or on technicals. And talking about a stock that's buzzing definitely on news flow right now is NIIT Learning. Look at the stock, a good up move coming in the counter over the last 1 hour or so, and that's because the company has reported a good set of quarterly numbers. To talk more on the numbers, what actually contributed to the quarter gone by, we have Mr. Vijay K. Tarani, who is the Vice Chairman and MD at NIIT Learning Systems. A very good afternoon to you, Mr. Tarani. Thank you so much for joining us on ET Now. And firstly, let's talk about the quarter gone by. If you look at your constant currency revenue growth on a quarterly basis, also a healthy number coming in. Your revenues have posted a good growth in the quarter gone by. If you could tell us what exactly contributed to such a performance in the previous quarter?
Okay, so I think in the global uncertainty which exists across the board, I think there is an element of cost optimization which most of the big companies are looking at on one hand. On the other hand, they have a stronger and larger transformation agenda, because I think things like generative AI and overall digital transformation have great opportunities. So they want to reskill the workforce as well as cut down their cost structure. And I think NIIT Learning Systems is perfectly positioned to be a very, very reliable partner who can actually help them achieve this, of reskilling their organization as well as transforming the organization, as well as making sure that their overall cost structure is well managed. And I think that confidence with the 3 renewals, which make sure that we have 100% renewal track record and the strong confidence of the customer, basically that's what contributed to this growth. I think on our side, we managed our investments and cost structure very well. So I think we came at a higher margin, at a 25% margin, which was 113 basis points quarter on quarter. So I think overall, these are the factors which contributed to. we also have a strong pipeline as we go forward, and I'm sure you may have some questions on that, so I'll wait for that.
Right, so, but before we come to the pipeline ahead, what I also want to know is in terms of the margins of the company, we are seeing an improvement in the last couple of quarters that you're seeing, and Q4 managed at 25% overall in terms of the EBITDA margin, while FY24 was 24%. For 2025, what's the outlook FY25 in terms of the margins, 25, 24% or much higher is what we could expect?
Okay. So I think we are in a growth phase and we are building new capability as we open more frontiers. And during the investment cycle, the margin may vary. And we do believe that the margin will remain in similar levels. By the way, our guidance for the margin has been 20% plus. And last year, we managed our costs well. We did multiple things well. But we have to also invest in new capability and strengthening our market reach, because we are now gaining new contracts at a faster speed than before. And I think we have an opportunity to take the leadership position in this space. We are already amongst the top 5. We do want to make sure that we move our positions up front as we move in the global rankings. So I think keeping all this in mind, we do see margins in the same range, but they may be 100, 200 basis points lower than last year, and may as well be in the same year, because the certainty in the market will come from the second half of the year, which will determine. So overall, I think our margin trajectory over the period of time will now remain in this 22, 24, 25 range. That's approximately how we are gearing up the business.
Right. So the margin, you are expecting it to be in the range of around 20 to 25% or so, if you could put it in the years to come. But let's talk about the revenue mix, especially when you look at the presentation by the sector. Over the quarters, we've seen that the revenue mix, there is a decline in the tech and the telecom contribution to your revenue mix, while there is a mild bit of expansion coming in the life science and healthcare segment. Are you expecting such a trajectory going ahead as well, the contributions for your sectors? And also, if you could touch upon the order pipeline that you were talking about.
Sure. So, first of all, you are absolutely right in saying, so first of all, let me repeat the margin. I said our margins will remain in 22 to 25% range, depending on the capability investment that we are doing, right? So just keep that in mind. The second thing which you wanted to talk about, technology and telecom. Indeed, the spends of technology companies, I mean, you yourself report that how technology companies have been resizing themselves to look at the new market opportunities on one hand, and yet the euphoria of 2 years back when everybody went and overhired, they are balancing that. So in that, their spends on training and learning and development have come down. But in my opinion, that's just a balancing mechanism, and it will pass. And they will continue to remain strong contenders and strong business opportunities for a company such as ourselves. On life sciences and pharma, is a very, very big stronghold of NIIT and NIIT Learning Systems, and I think will continue to remain so. In fact, we will strengthen this further. We have opened up new areas, and I think in new areas, whether it is BFSI or energy, I think both are, and manufacturing, they are offering great opportunities. And I think the services that NIIT Learning Systems offers, and especially the managed training services, which help the organization to focus on their core business, and we look at the specialized activity of learning and development, I think is finding favor with many companies. Our pipeline is very strong. You refer to that. Our pipeline is extremely strong, and I think you'll begin to see the results of that. And you saw the results of that. We added 11 new contracts. We had a 100% renewal track record. We are sitting on a revenue visibility of 335 million from the contracts that we have. I think puts us in a strong position for the future.
Right, Mr. Thadani, thank you so much for joining in with us this afternoon, talking to us about NIIT Learning's outlook going forward as well as margins. 22 to 25% is the range that we're keeping an eye out on. So thank you so much, sir, for joining in with us. That was NIIT Learning's. They reported their numbers. We saw the stock spike up as well. But let's keep it going with the other stocks that have been buzzing in trade. And on the technicals, Dhwani, you picked out Indian Hotels, right? What are the charts looking for this one? We have seen a decent run up for Indian Hotels. Plus, overall, when you look at it, the trend is there to go out, go to the hotels, staycations, everything is trending in terms of travel and tourism. So what's the outlook here?
Absolutely. On multiple time frames, when we are checking out the chart of India Hotels over here, we are seeing that on a daily chart, we are having the stock move above its important key averages in today's trade. And overall, the derivative data is also suggestive that the upper side window of 600 call options has opened up over here. On a weekly chart, also what we are seeing that since the highs were made over around 620 levels, the stock has been showing some stagnant sides, but on the lower side, the support level is very strong over here, where 540 is holding out on the bottom. So from the current level, it's a more of a range trade that we're taking from the current levels for a target of 620. On the lower side, the support level has shifted on the higher side now, and the support stands at 565. So with the 565 stop loss, I suggest a buy on India Hotels for a target of 620.
Okay. That's on Indian Hotels. Let's move on and talk about FAM Industries. This one is in focus after it reported a strong set of numbers. Overall, what it did was it outperformed the two-wheeler industry growth. And what is aiding the growth is one, robust production growth for its main customers like TVS, Honda and Suzuki, increasing adoption of the LED lighting. That all supported the growth, and that is why the company managed 28% growth in terms of revenues. Even the operating performance was quite strong. We saw the margins see a bit of a stable 13.5% to 13.8%, while EBITDA saw an improvement of 25% on a year-on-year basis. Other than that, analysts say that the recovery in two-wheeler industry is quite evident, and that will benefit the company. So yes, the stock is managing to hold on to 2.3% gain as of now.
All right, let's move on. Let's talk about BEL, because after its numbers, brokerage reports, the company had a con call today where they've given a robust guidance coming in. They're expecting a revenue growth of about 15% for FY25. Along with that, they're expecting the EBITDA margin to be in the range of about 23 to 25%. They're saying they're focusing on improving operating efficiency. Going ahead, they're expecting an order intake of about 25,000 crore rupees for FY25. Also, they are saying that they have about $110 million export revenue target for FY25. Talking about the order from the export market, they're expecting 200 million plus, another 200 million plus order coming in from the export market, capex, and they have expansion plans as well. So robust commentary coming in from BEL on it during their con call. The stock actually holding on to good gains.
Absolutely, stock holding on to good gains. That was stock number 9. But on that note, we are going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.